Hello, this is Bob Baird of Disney Financial. I've been in the financial services industry for over 25 years, and I've never seen anything like the opportunities I see in today's real estate and mortgage markets. But like most opportunities that come along in our life, they don't last forever. Things are going to change. So let me show you why, if you're on the fence at all, whether you're wondering about whether you should buy or refinance, that you should act now. I call this the cost of waiting in today's market. First, let's take a look at a historical perspective. This is a chart of the London Interbank Offering Rate. It's a short-term rate that banks use that's a little like T-bills or Fed funds. It's one of the most common indexes that is used today to create variable rate mortgages. Right now, it's at 0.23%, less than a quarter of 1%. It just can't go much lower. So if you're in a variable rate at this point in time and you have any possibility of refinancing, you should do it now because they can't go much lower. Now this is a chart of long-term mortgage bonds. Now it's important to know when you look at this chart that when prices go down, rates go up. And when prices go up, rates go down. Now rates were moving slightly higher and prices going lower into May of 2010, and then the Greek debt crisis imploded. This made international investors flee European bonds and buy our bonds and treasuries and mortgage bonds. Now this sent their prices higher and ultimately to the lowest rates in history. Now this crisis isn't going to go away tomorrow, but it's not going to last forever, and these rates won't either. At some point in time, we'll see them return to the level that they were in April or May of 2010. They might even go higher. So what does that mean for you who might be looking to buy a home or to refinance? Let's take a look. Here's a rent versus own analysis that we do as part of our normal work with customers. Now here's a case where a renter pays $1,500 a month and he's looking to purchase a $400,000 house with an FHA loan and 3.5% down. His payment, including taxes and insurance, is going to be about $2,500. Now, after taking into account his tax benefit and the principal paid each month on the loan, which is a bit like a savings account to himself, his actual cost is almost the same as renting. Now, if he waits until rates go back to where they were, let's say 5.5%, his payment goes up $250 a month. But here's the real kicker. Let's say you're worried about a further drop in house prices. What happens when rates go back to normal and he buys that same house for $20,000 less? Because of the higher rate he's likely to pay, his payment still goes up. He's going to pay more in the long run for a cheaper house because he could buy it today at lower rates. This really adds up over time. In 5 years, the difference between buying now and buying at a lower price is about $12,000. Now, if you're looking to refinance, this is probably the no-brainer of all time. But what type of loan should you get? In this case, we have an example of someone with a 6% interest rate. At the current rate, we can save this homeowner $23,000 in 5 years. But here's the thought. This homeowner can also shorten the term of his loan to 20 years and keep the same payment as he has currently. In 15 years, he's going to save nearly $120,000 over his current payment. The point is, there's lots of options today, and you need professional advice from a true professional. Not the corporate jabber that you're going to get from a retail bank clerk or an internet operator that you don't know and doesn't care about you. Now, why is this? Well, when you're doing a loan, the single most important cost factor, if you decide to refinance, is when you lock your loan during the 30-day window of your loan process. Now, here's a case of a couple of loans that I saved a ton of money for earlier this year. At the beginning of the loan process, rates were 5.25%, historically very good, and one in which both of them were happy. But there was a chart formation that I noticed that suggested to me that prices were headed higher in the near future. So I suggested floating, which they did. By waiting to lock, I save these clients over $1,200 a year in their payments. That adds up over time. The same thing applies when prices make a sudden drop. Following the market day by day, minute by minute, gives me the edge. So don't trust the most important financial decision that you're going to make to just anyone. Get professional advice from a professional. This is Bob Baird at Disney Financial. My phone number is 619-463-5524. You can call and ask any question that's on your mind. And thanks for listening.